If you were going to watch one video to the end this week, I guarantee you will want to make it this one. Tom, I'll tell you, I am hurting today. I wish I took every single dollar I had and plowed it into Apple put options right at open. Some of these Apple put options literally rose by 2,100% today, and even more in certain situations. In today's video, we have some game-changing news to talk about related to the market, the powerhouse Apple. We have some China news, and we have a lot of other crazy stuff you won't want to miss. Towards the end of today's video, we have a $3.6 million trade betting on credit card delinquency. So you better stick around for that. But with that being said, Tom, let's jump right into today's episode.
Yeah, and as you guys can tell right off the bat, it was a very bloody day overall in the market. SPY's down, Apple's down, Tesla's down. I mean, just about every stock is down. If we actually look at my watch list here on the left side of the screen, man, AMC was even down 36%, Mike. NVIDIA down 3%. So we had a lot of big drops in the market, and Apple was one of the bigger players really pushing us down, honestly, all day. This stock never really came up. It had a few slight moments where it barely traded higher for like 10 to 15, 20 minutes or so, and then it just kept turning right back over to the downside. And of course, Mike, they have some bad news coming out of China. It looks like China's actually banning their government officials from using the iPhones for work. So that's a pretty big deal. I know that China and the US tensions have been heating up, and they might be thinking that, there might be some spying going on or some like data collection or something weird. But either way, it's pretty weird to see China doing this.
Yeah, so Apple got punched in the face today. Looking at their stock, it was one of the most read days that we've seen in some time. And it's not, I'll say it this way, it's pretty rare to see Apple stock down, but also down this much. What's kind of scary is that China is one of Apple's biggest markets, and it generates nearly a fifth of Apple's revenue. So, to see this this sort of regulation / tensions increasing, it definitely has some Apple shareholders pretty scared. So keep a very close eye on Apple for tomorrow. This news is pretty rare, and it's clearly moving the stock in a big way.
Yeah, and I think that either way, I'll be honest, I think Apple was going to fall today, despite the news or not, just given price action going on in the market and everything that we've been looking at. But this news, I feel like, definitely added fuel to the fire, and it is only central government agencies at Apple too. So keep that in mind. It's not like they're going to lose tons of China sales because of this, but at the end of the day, you never know. Maybe the government does something else with Apple phones down the road and ends up banning them or banning production, or we have no idea what could go on. China is you never know what they could pull out of their sleeves there, Mike, but it was just an insane day to the downside overall. And man, even NVIDIA, Tesla, and others were taking pretty big hits. NVIDIA's charts, honestly, no much better than Apple's.
Yeah, that's the thing. So, whether you're looking at big tech stocks or just the market overall, stocks are getting a little bit weaker, and it's hard to deny that. And, I'm not scared at all, Tom, because a lot of times when we see these sort of shifts in the market, there are oftentimes a lot of great opportunities associated with them. So, I'm sure you can hear it in my voice already, but I'm pretty excited with what we have going on in the market. But there was something pretty sus recently that has to do with good old Uncle Sam. So basically what we have going on right now is the government, and I know some of you guys won't believe this, but the government's doing some shady stuff right now where we could see over the past year, non-farm job payrolls have been revised, very consistently, which, isn't the problem, but they've had some pretty big misses lately. So essentially what we're seeing right now is the government report data saying, oh, look here are the payrolls data for the month. But then they come back, after they already published the big headline and say, actually, we were kind of wrong. Here's the real data. And the problem is that they're missing by quite a bit. For example, in June, their original jobs report came in at 209,000 jobs. And they're like, oops, actually, we were wrong by half. The real number is only 105,000. So the main thing to take away from this is, as we see more jobs data come out and more inflation data come out, just keep in mind the government's trying their very best to, hold this market strong. But, seeing things like this is definitely a little bit suspicious.
Yeah, it is. I mean, that June revision down 50% is really pretty crazy. And, it's hard to find data on this going back in history. So, we can't really compare it to, 2022's revised reports compared to their originals either. So, it's hard to really tell, if how often that they're missing by a lot. But I'll tell you what, that June reading is definitely a big standout. 49%, sure, maybe 20%, 15%, but 50%, Mike. Could you imagine the headline that day whenever they released the 209,000 number? If it would have came in at 105, that could have possibly crashed the market and maybe triggered a flash crash or something weird like that could have happened. So I'm kind of glad that they revised it, Mike, honestly. But at the end of the day, they shouldn't be meddling in the markets like that. And I know that usually pisses a lot of people off. So sound off in the comments if that makes you angry. And man, it just adds more fuel to the fire when you see those revisions go south like that.
Tom, how do you miss by 50%? That's like the weatherman saying, you know what, it's going to be 100 degrees tomorrow, and it turns out it's 50 degrees. You're like, what? How are you this wrong? Was Jim Cramer making these numbers? What's going on? But
I mean, man, it's weird. These numbers are insane, Mike. I don't know, imagine this. I don't know who's getting together in the background thinking of this, but they're probably getting around a table yes, we're going to be releasing it a lot lower this time to alleviate the fears here.
Gosh. So that is that, but there's also some scary things going on with the economy lately, and that has to do with credit card and car loan defaults hitting a brand new 10-year high. So this is obviously a bad thing, and it's definitely something you don't want to see, and it just boosts that recession trade even more. But to see credit card delinquencies and car loan delinquencies rising this quickly, it is something that you definitely should not ignore.
Yeah, exactly. And this is coming as Goldman Sachs actually lowers their chances of recessions from 20% down to 15%, right? So it's kind of weird now all these numbers are upticking. They might have to re-revise those numbers again, Mike. It seems like every revision lately is having some issues. So we'll have to see here. But, it's definitely bad to see defaults going south. And like you said, it's just another problem whenever you're looking at our economy right now. It's never good to see that. It shows that there's pressure on consumers in a pretty big way, especially when you see credit cards and auto loans getting like that. And I'm not surprised to see the market starting to dip down from this. We've already been seeing the market start to pull back significantly from the high of 459 to 460. Now we're starting to get that secondary leg kind of to the downside here. So I'm wondering going into tomorrow if we're going to start to reject off this 446 resistance and start to head a little bit lower, Mike. There's just so many bad things hitting the economy right now, combined with Apple and Tesla and Nvidia and these big tech stocks falling. It's just it's been brutal the past month or so.
Yeah, a lot of people are looking at the market right now and they're saying, show me the money. They want to know what the next move is. And coming into this time of the year, it's normally bearish. And around this time of the year is when VIX really likes to party. So if you don't know what VIX is, basically when stocks are falling and people are panicking and everyone's freaking out, VIX shoots up. And basically, when VIX shoots up, the market goes down. And historically, this time of the year is one of the best times of the year for VIX. We could see the red line showing the VIX so far this year, and then the gray/black line showing the average of VIX. So, that's just another thing to keep in mind as we head into the end of the year.
Geez, Mike, that is pretty freaky here, considering August through September is just terrible for the VIX, and it makes sense. September is one of the worst months in the stock market, and so far since September 1st, let's see, Let's see how we've done, Mike. The SPY ran from 450, 350 around highs all the way down today around 444. So far, September's historically working out pretty well, and the VIX is starting to pop up. If we go to the VIX chart, it's been very low lately. We go out to the daily. I've been actually looking at VIX a lot. There was a big trend line it was trending on. Recently, it actually touched it again, but it's been bouncing off this lower support around 13 a ton here. And I think that if the market starts falling off, obviously, this will be a big move back to the upside, maybe up to 19, 20, or maybe even higher. We were actually just hitting 19 or 20 a few weeks ago. So I think the VIX could go a hell of a lot higher, Mike. And it's good to see that chart just kind of, giving us more info and kind of like giving us a better idea, because I think a lot of people are starting to look at UVXY with the market going down, and this could start to be an amazing trade in the short term if that market really does start falling and that volatility starts flying higher.
No doubt. So when the market falls, there's a lot of ways to make money from it. Of course, you can short stocks, you can buy puts on stocks, you can buy stocks like UVXY, which rise when the market goes up. You can buy stocks like SPXS when they pop when the S&P 500 falls. You can trade SQQQ, also pops when the market's falling. So there's a lot of ways to make money in falling markets, and a lot of times some of the opportunities when the market's falling is even better than when it's rising. So good stuff there, Tom. But I know this next part of the video is really going to it's really going to hit people a different way. There are some of you who in the comments who live and die by the saying, go woke, go broke. And I have a nice end of year present for you, where we had some news come out today showing that there's going to be a brand new ETF that profits from go woke, go broke companies. So basically, there's going to be a new ETF or stock out there, ticker symbol GWGB, go woke, go broke. And essentially, it is going to short those woke companies like Disney and Target and, Anheuser-Busch and stuff like that. So I guess, Tom, we have some people getting an early Christmas present.
Yeah, we really do. That's been a big thing in the comments lately, especially with all these stocks like Disney, Netflix, Budweiser, Anheuser-Busch, I should say, ticker symbol Bud. All these stocks have been taking big hits lately, and a lot of people attribute it to, go woke, go broke, and especially Disney lately. There's been a few people in Discord, obviously, and just everywhere talking about Disney, changing characters in movies and adding things to movies, et cetera, et cetera, et cetera. I'm not going to get into that, obviously. We'll probably get in trouble, Mike, if we got into it too far here. But at the end of the day, these companies have been getting hit really hard from this, and these new ticker symbols could be pretty fun. So GWGB, there's even one that will follow self-defense, trading under guns, GUNZ. But the go woke, go broke one will be pretty fun, and I'm very curious to see what they exactly put in there and how they switch it up. Because, for example, let's say Disney keeps falling down, right? Well, what if Disney starts rising? Maybe they'll start to change their weightings a little bit. It's definitely an interesting ticker.
So here's my problem with this, Tom. It's not the strategy behind it, but it's more so the timing. You're telling me that, looking at Disney stock, it's not like they just became woke, right? They've been woke for some time, but you're telling me you want to short it now after it's fallen from 203 all the way down to 80? Or let's say, that one's just a fluke. Let's say we go to Target. You're telling me you want to short it now after it just fell off a cliff from 267 down to 123. Or let's say you say Bud, Anheuser-Busch. You're telling me now you want to short it, that it's at 56 when it was, at one point at highs of 133, but that was years back. But even recently, it was higher, So it's like, my problem is not the ETF. It's just like, I feel like the timing kind of sucks.
Exactly, right? And even if we go out to SGym, right? Like short Kramer, we can go ahead and look here. Whenever SGym came on the market, look, it got destroyed, right? It fell down a lot, actually, from 26 all the way down to 21. Now it's starting to go back up a little bit. These ETFs are definitely going to be wild. They're all not going to just, keep flying to the upside or anything. But hey, it's definitely going to be fun to trade, Mike. And I'm sure that we're going to get a lot of comments once it starts coming out on the market to check it out and different things like that. But whenever I look at stocks like Disney, that's a really good point that you made, Mike. Why would you buy it now, or why would you short it now, right? It makes no sense. It's already fallen so much. Sure, it can go lower, but I would say in the grand scheme of things, we're getting closer to the bottom than we are the top.
Yeah, so we'll see what happens. But, Tom, we did have some fun earnings reports today, the main one being C3AI. And I'll tell you, to start out, it ain't looking the best.
Yeah, it really doesn't. It's all over the place right now. Fell down a lot, all the way down to 28, but it ripped back up to 32. Now it's kind of consolidating around 30. It looks like it's going to end up going down, but you never know with these. They can turn around quite a bit by the next morning. But yeah, this was the main earnings that we were looking at for today, or for the week, actually. And, honestly, it's a little bit underwhelming right now. I was hoping for a nice pop, but even the move down here, it's only down like $1. So we're going to need to see some more volatility come in on that one. But we still have DocuSign tomorrow, Restoration Hardware, and then KR on Friday. So there are a couple left, but AI was like our last saving grace this week for the bigger move, I think.
Yep, no doubt about that. Well, Tom, it's now time for the fun stuff. So let's get right into some setups and predictions for tomorrow. One stock I'm watching very closely is the powerhouse Apple. All right, so Apple had a rough day today. It's pretty rare to see Apple down this much. There is some bad news behind it, but it's not like world-ending news by any means, but, it's still not good. Looking at Apple right now, bears are definitely in control, and I will be watching this one for a continuation down for the rest of the week. So I'm relatively bearish on Apple, and, I would not be surprised if it ended up retesting like 178 or even lower, depending on market momentum.
Yeah, I could see that happening. 180 is a pretty big support, and I think we'll end up getting down under there personally. This is a pretty bad move today. Like you said, it has news, and the overall market is starting to really tank down as well. So my first play, Mike, is actually NVIDIA, of course. We talk about NVIDIA to the downside all the time, and today we finally fell under 480. I've been waiting for us to fall under there for a couple weeks now. We got under there. Tomorrow, if we fall under 465, I will look at more puts to the downside. 465 is a pretty big support. I do think that we could see maybe a slight pop around open, but I think that we'll start to sell off and eventually get under there. To me, Mike, whenever I zoom out, this selling is just now starting on some of these stocks, and NVIDIA's daily, they're still up around highs, honestly, whenever you zoom out. So there's so much room down here. It's kind of crazy.
No doubt about that. Another stock I'm watching pretty closely is SQQQ. Tom, that one always used to give me a tongue twister, but once I just say it slower, I normally make it out all right. But looking at SQQQ, it had a pretty solid day today. Basically, this goes up when tech stocks or the NASDAQ falls down. There's definitely some more bearish momentum and power building behind the scenes right now. And overall, I think the risk to reward setup with SQQQ to the upside is pretty favorable right now. But do not hold this over long periods of time.
Yeah, exactly. Like if you guys buy like SQQQ or even my next play, UVXY, this is actually my next play too. Another play that's going to inverse the market and kind of go with VIX to the upside. These two stocks are going to be amazing, like if the market keeps falling, right? But if we go out to a daily chart and we zoom out, you can see that it decays over time. That's just how these stocks are designed. They usually fall down, then reverse split, maybe go up a little bit, then fall down again over time, and then reverse split again. If we go back in history, they've reverse split. Man, UVXY's reverse split way more than I even thought. So, yeah, that just goes to show, don't hold it long term. But in the short term, some of these moves can be crazy. Like recently, from the recent low to high, it ran up 34%. And I would think that where we are now, like if VIX starts running up to test 20 or something, this stock could easily get up 30% plus again on UVXY. So keep in mind, UVXY will be one of those VIX plays. And we did talk about the VIX seasonality earlier, Mike. And I think this will be a great play to kind of capitalize on that, and you can maybe get some options that expire in late October or November or December, and then maybe hold it through September. But obviously calculate your risk, and that's going to be kind of like a hedging play as well. Like if that's the only play you have, probably isn't the best thing to do that. But if you have a exposure to the S&P 500 and stocks, then I think that's pretty safe here.
Yep. And, just like we said in yesterday's video, there's going to be a lot of opportunities in the short term. I remember specifically saying in yesterday's video that the market was super choppy, but that's all right because, the momentum's coming. And what happened today? The momentum showed up big time. Look at Apple's options chain. But, if you guys are looking to capitalize off of the short-term momentum and price action, you have to check out that first link in the description and the comments down below. We talk about it all the time, but the StockedUp Premium Group is the best program for short-term trading. Not only do you get access to our hybrid bot, and, for example, it's played today with SQQQ, went from $56 up to over $100 by the end of the day, but you also get access to Sniper Bot, SM Bot, multi-million-dollar hedge fund trades every single day. Swing plays, premium selling plays. You can chat with Tom and myself all day long. You have access to a private community. And in the worst case scenario, it's not for you. That's all right. You can cancel and, no problem, but it's definitely worth trying at least for a month. It is, you basically have everything you could possibly need for short-term trading. So definitely check it out. It is definitely worth it. It'll be that first link in the description and the comments down below. But Tom, let's jump right into tomorrow's momentum plays. And with the first one, we have a stock that I'm actually surprised you didn't talk about yet in today's video, but that's AMD to the downside.
I know, right? I did NVIDIA, so I couldn't talk about AMD or else they would have been on the list. But yeah, AMD had a pretty bad move today in their own right. If they get under 108 tomorrow, go ahead and look at them to the downside. That's going to be a pretty good whole level to break below.
All right, with the next one, we have Amazon also to the downside.
Yeah, I will say this was a pretty bloody move too. If they end up falling under 134, look at puts. It's just under that low of day around 134.50, and 134 is a pretty decent support over the past couple weeks.
All right, and then with the last one, we have Tesla for both directions.
Yeah, Tessie, they fell down a lot, but they also recovered a lot. I know Christian actually had a pretty good recovery play on this one, but if they break out above 250, 250, I'll look at some calls. That high of day will be pretty hard to get above, I think, though. If they fall down under 250 even again, look at puts. I think that if they get under 250, they could easily retest 245, if not lower. And if that market's selling off, you better watch out, because look at this one early morning today. It dropped like 10 points within the matter of 20 minutes.
Run! Seriously, yeah, that thing was sinking right at market open just with apples. So keep a close eye on Tesla. We have the upside level for calls, the downside level for puts, and then don't forget about Amazon and AMD as well, both of which have downside levels for potential puts. But Tom, it is now about that time for the big money $3.6 million trade of the day. And this one's a little bit extra special because it ties right into the news we were talking about earlier, and that is ticker symbol COF. This is Capital One, and Capital One Financial obviously has some decent exposure to credit cards, and basically someone put $3.6 million into the COF 110 strike put options that expire on October 20th of 2023. Tom, when you have a second, let's go back to that credit card delinquency news and the car loan delinquency news where, we're hitting 10-year highs, right? Obviously, it's not good to see, one, the fact that credit card delinquencies are hitting 10-year highs, but what's even scarier is how quickly they are rising over the past couple of years. Like, it's not like they're slowly lollygagging higher. Like, they're starting to go up with some momentum, so it's definitely not a good thing. In looking at COF and this option play, the big money play, I do like it because, one, the options are in the money, so that just gives you a little bit of extra security. I like it also because the setup looks good, but I also like the fact that $3.6 million is in it. It's not like it's like $300,000, it's $3.6 million. And then on top of that, the expiration is, something that has some time, October 20th, but it's not too long. Like, there's nothing worse, Tom, than when you get like a big money play and then it's like, this option actually expires 4 years from now. It's like, come on.
Yeah, exactly. I kind of feel like that sometimes, but hey, the past couple have been, a little bit shorter, and I do like COF having that, or this one exactly, being out to October, because it gives us that exposure to September, right? This is such a brutal month historically. And I feel like if it is brutal, these puts will do amazing. These credit card delinquencies are going higher and everything like that. And if we actually go back to the credit card delinquencies chart here, you can actually see that, like you said, the pace at which we're rising is insane. We haven't really seen a pace like this since right before 2008, like 2006, 2007, heading into 2008 and 9 was kind of like where we saw that pace last. So I'm really hoping that we're not going into a bad situation like that. But if we do, we know that, credit cards, banks generally get hit pretty hard. So that is a scary sign, Mike. And 3.6 million going into these puts, it's pretty tempting. Now, I will say they are the 110 strike puts. They're a little bit in the money at this point. I think even the 100 strike puts could be good, like if somebody out there wanted to go with some cheaper ones. But at the end of the day, 110 will be safer.
No doubt. So, guys, in today's video, we talked about a lot of important and exciting things. And with everything being said, opportunity is right in front of us, whether it's these, it's intraday Apple price action, or whether it's, some stocks at very low levels, or, what have you. There are opportunities all around us. So let's really capitalize on this. Keep your head up high. Keep those stop losses in place. Don't get too greedy. And let's have a great week, guys. Tom, do you have any final thoughts or anything else you're hiding from us?
Yeah, yes, I'm hiding one last thing, Mike. Now, it's not too important, but I will say this. The market has been moving a lot off of job numbers lately, and tomorrow morning, 1 hour before market open, we do have initial jobless claims coming out. So if those end up surprising a little bit, we could see some crazy moves. I'll say this, when the ISM services PMI came out today, it actually caused SPY to drop a pretty good amount. So I'll definitely be keeping an eye on those initial jobless claims.
All righty, sounds good. Last but not least, if you guys are new to the channel, demolish that subscribe button. If you like their videos and you want to see them more often, you got to subscribe. In every single video, we talk about some awesome setups for the market for tomorrow, big money, multi-million-dollar hedge fund trades, and other charts that a lot of times you just wouldn't otherwise have known about. So definitely subscribe to the channel. And also, we want to give a giant shout out to today's member of the day. MMM had an awesome post in the Profits channel this morning. Great job with your QQQ play. You've been in the chat for a couple weeks now, and you've been very active. So definitely keep it up. We love having you. But all in all, guys, let's have an amazing week in the markets. Don't forget to check out that first link in the description, in the comments down below. Join us, and let's have an awesome week. Thanks for watching.